and welcome to the 25th of August morning market wrap, 9 a.m. wrap. I'm Greg McKenna. It's been a tumultuous night, obviously, for markets, with some big moves in the Dow, the S&P, European markets, currency markets, and general carnage all over the world last night. In many ways, some of the moves probably overdone and could speak of some mild recovery in the days ahead, but the overall outlook looks like it's one where traders and investors have figured out that the emperor, namely central banks, have got no clothes on. And even though it was China that got the blame as a catalyst for a lot of the recent moves, it's really about quantitative easing, about overvaluation of stocks, and about a realignment that markets need to do now as a result of having gone too far too fast. In terms of the moves, let's start there. The Dow Jones was down 3.57%, 588 points. That's much better than the 1,000 points it was off at one stage. The Nasdaq's down 3.82, the S&P down 3.94. That's left the ASX this morning looking incredibly weak and set to open around 200 points. Interestingly, last night it was a big fall on the futures at one stage. In a combined futures physical point of view, they hit the next trend line. So they've satisfied the 5,500 target we had, the 5,300 target they had, the 5,150 target we had, and then the trend line target. I'll show you that in a minute. Obviously, those kind of moves are felt in currency markets as well. Euro back up above 116. Dollar yen crashed 116.40.50 at one stage before rallying back to 118.42 when the Dow lifted off its lows. The Aussie fell down to 70.58. Reasonable performance when you think about it. It's back at 71.5 roughly this morning, which is pretty solid. And maybe Rob Rennie's right. Maybe there are lots of buyers still around, or perhaps it's just like the euro. Now the euro's up because the market's way too short. The market's been way too short euros. The market's been way too long US dollars. They've bet their life that the Fed's going to tighten in September, and now with all the turmoil, bets are being cut. Money's being taken off the table, positions are being paired, and as a result, you've got to reverse the trade you had on. So if you're short euro, you've got to buy euro. That's what's driven euro to 116. Dollar yen, on the other hand, that's a natural safe haven, and that's why we saw it, crash last night, even if it has come back a bit. Aussie dollar, it's being held up as well by speculative positions. So that's what's helping it out. In terms of where we're up to at the moment, I think it's worth having a look at a few charts. So I'm going to share my screen. So let's just do that now. And we'll share. I'll shrink that. Yep, good. I'm sharing screen. Sorry, everyone. I'll just shrink this down a bit. Okay, let's look at the ASX 200 first up. The ASX 200, you can see here on this chart, hopefully it's very clear, that we had this big uptrend break. We had it take out, this is a weekly chart. We had it take up the outtrend that went back to 2011. It's crashed through the bottom of that and gone through the 200 week moving average, and now tested down to this this important trend line that goes all the way back to the low in 2008. Now that's had a few touches, so it's a reasonable line. A break would be terrible, obviously. If we look at the dailies, this is where the support might come in. It's hideously oversold on a daily basis. Look at that fall. 1, 2, 3 days, and it's fallen 500 points. More than 10%. I know that's happening all over the world, but that one looks a little bit overcooked. We might see some support off that line again today if we see it get down there. My expectation is that the Chinese will get involved today. They won't leave it too far too long. If we have a look at the S&P, I've highlighted in my written stuff for Go Markets and the Business Insider that we've broken a massive trend. This is the trend. This is the QE trend. This is the 2011 run higher. We've broken down. Momentum slows, and we've now got my 15 and 30-day moving averages crossed over. That's the first time that I've seen that crossover since down here somewhere. So it's been a big move. Is it overdone short term? Once again, this is the weekly charts. Sure it is. It's massively overdone short term. So don't be surprised. And it's also outside the Bolly band. That's also another good signal the market's going to rally. I wouldn't be surprised to see a 150-point rally from here. But it's a rally to sell on my book. Also, let's have a look. Oil continues to crash, but oil's crashing because of fundamentals. The global economy is weaker than people thought. That's just the reality. China's got some real issues, and it's interesting, if you have a look at Business Insider today, one of the top stickies is about what I think is the most important issue in global markets, in the global, geopolitical space at the moment, is the pressure that the Chinese president is under. He started this, this move towards liberalisation, and he also started the move towards the crackdown and reform agenda. And it's clear that just at the moment, that is not going as well as it could have. He's losing face all over the place. He's losing face in the economy. He's losing face in the Shanghai stock market. That's one of the reasons I think they'll be in today. They'll either throw money at the market or they'll put measures in or something like that. And so that's the sleeper. There's a good article on Business Insider about that today. So have a read and keep on top of that. Overall, gold is, its half-life as a safe haven asset's finished. It's at 1152 already. It ran into my slow-moving average and hasn't been able to get through. So, technical still working in times like these, as you just saw with that Aussie chart, and as you've seen in the S&P, in the death cross in the Dow, and in other markets. What have we got out today? There's a few bits of data from Germany later tonight. What do we got? We've got, that's right, German and the IFO tonight. That's probably less important than the overall market price action. So when the market opens in China today, just after 11 o'clock, keep an eye on that. In the US, Richmond Fed, new home sales, consumer confidence, Case-Shiller, those sorts of things. One of the interesting things about what happened overnight as well, when you talk about the US, was that we heard from Fed President Fisher in Dallas and also Dennis Lockhart, both of whom seem completely disconnected from what's going on in markets. Now, I'm sure that Janet Yellen and Stan Fisher are not disconnected from markets. And with oil, which I didn't mention, down at, off 6% last night, down at 38 bucks, there's a clear deflationary pulse coming. So the Fed might have missed its window. There's no doubt that US growth is incompatible with zero interest rates, but the Fed might have missed its window. And one of the big investment banks, I can't remember which one in the States, I know it was Barclays from the US, has pushed back their call to December. That's looking increasingly like that's going to be when the Fed tightens, if at all, in 2015. Anyway, I'm a bit of a contrarian today. I think we might, over the next 24, 36 hours, see some short-term lows. Overall, though, I agree with John Hussman that this is the start of something large. I've been in cash for too long, and I've missed some trading opportunities in terms of my super, but it's well in the money at the moment. It's just a question now of whether I switch back some tactical money for the bounce, or I wait for lower levels. So that's something I'll be talking to my wife about over the next little while. Anyway, it's that time of markets where fear is key. So keep your position short. Keep your position sizes relative to the risk tolerance you have and your experience as a trader. Otherwise, people get blown up in markets like these. They sell at the bottom. I know so many people that sold at the bottom in 2009. They buy at the top, they get killed. Markets like these are for pros who've been doing it for a long time. So stay safe out there and have a good day. I'll be back at 9 a.m. tomorrow morning. You can catch me on Twitter at Gregory McKenna, or my trading Twitter handle is at FX_global. I've also got my own website, but that's it from me. Bye for now. Safe trading. Have a great day.